Accounting assumption number 3, or A3, is the period assumption. So we're looking at our accounting assumptions group. These are the ones that tell us how to record the transactions, and we've got our third one here, period. What's that about? Well, the 3 financial reports of the business must be prepared for a particular period of time, e.g. a month, a half year, but no longer than a year, so that results can be compared over time from one period to the next. We can see how we're going. And profit can be determined for each period by matching revenues with the expenses for the period. Really important word here, matching. Match revenues with expenses. And we have this assumption so we can draw a distinction between the expenses, where the economic benefits of something have been used up or consumed this period, with assets, where economic benefits will be used or consumed in the future. What are we talking about? Well, so we got the going concern assumption, which is the second accounting assumption we looked at. And that assumes the life of the business is continuous or infinite. So here's today, line into the future. There's no second line here saying the business ends there, or there, or there. We just say the business is infinite. But I guess what we say is, well, when are we going to measure how we're going? When are we going to report on the performance for this period if the period has no end date? That doesn't really make sense. So what we should say is, let's measure the performance of the business. We just need to break it into periods. How long should that be? Every 2 years, every 5 years, etc. Or maybe we just do it when the business finally ends. Well, all of these are wrong. What we want to do with the period assumption is break the infinite life of the business into what we call reporting periods. And at the end of these reporting periods, which must be of equal length, we've got to stick to it. So for example, if we choose monthly in 2021, there'd be 12 periods. And in 2022, there'd be 12 periods. And in 2023, there'd be 12 periods, and so on. So whatever length we pick, we're going to stick to that, because now we can compare January with February, February with March, etc. And then we can compare January 2021 with January 2022, etc. We might choose half yearly. We can also do quarterly, every 3 months, which might pop up, but yeah, half yearly, so 2 periods a year, January to June, July to December, same here. And that way we can compare the first half of the year with the second half of the year, or the first half of 2022 with the first half of 2021. Or we might choose to report yearly, just one big period of 12 months this year and one period of 12 months that year. And that is the maximum. 12 months is the maximum period length. And why is that? Well, there's many reasons. You don't want longer than that because it's too long. You need to know how you're going. But also, businesses have to pay their taxes every 12 months. So that you need to calculate your profit to figure out how much your taxes are. So that is the maximum period of time. Whatever period of length we choose, what we're going to do is at the end of these reporting periods, we're going to calculate net profit by matching our revenues for the period, what has been earned. Now we'll look at this in accrual basis, the word earned in more detail. Minus the expenses for the period. What has been incurred, or we could use the words consumed or used up, but we'll look at what incurred means in a later video for that period. So for example, here's the first period. At the end of the period, we're going to match revenues, 1,000, minus expenses, gives us the profit. End of period 2. Match revenues, 2,000, with expenses, 1,500, gives us our profit of 500 at the end of the third period. Revenues, 1,500. Expenses, 500. Net profit, 1,000. So whatever length this period is, this could be a month or a year, but at the end of these periods, we are matching revenues with expenses to get net profit. And the good thing about that is we can now compare the performance of the business over time. So we can see in the first period, net profit was 300. Second period, it was 500. Third period, it was 1,000. We're doing good. This business is going well. But it could also be the other way. And that's why we do this, so we can see how we're going by comparing future periods with past periods. It also allows us, and this is probably the most important bit, it allows us to make a distinction between expenses. So we will look at definitions of what expenses are later, but we'll say expenses are the economic benefits that have been totally incurred, or we could say consumed, used up within this period, versus assets. That's where the economic benefit of something will be used up in a future period. Let's take an example. Let's say a business has a monthly reporting period. We've got January, February, March, all the way up to June here. Obviously, we'll go into the July and so on, but we'll just look at the first 6 months. On the 1st of January, it pays its rent for the next 6 months. So that means there's going to be, and the problem here is it reports at the end of January. So what we're saying is there's $1,000 of rent here in January, 1,000 in February, 1,000 in March, April, May, and June. And we're going to do our profit report at the end of January. So now, because we're using this period assumption, we can say, well, I've used up January's rent. I've used up the economic benefits of that rent. It's been incurred, consumed, whatever you want, however you want to put it. So that is an expense. What does that mean at the end of January though? This is the rent I haven't used up. Rent is an economic benefit. and it's going to be used up in future periods. So the beautiful thing about this period assumption is it says, well, you can now recognize there's a $5,000 asset for the economic benefits you will get in the future from 5 months more of rent. And that's the beauty of the period assumption. It allows us to split or draw a distinction between the expenses and the assets